Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a phenomenal day. We're going to take another look here, of course, at Bitcoin and the overall market. We have a very interesting dynamic here where fear is high, altcoin season index is higher, and we have a lot of liquidations across the board. So we're going to talk about a handful of things, including CME gaps here that were filled, some left remaining, and just the overall sense here between Bitcoin dominance, altcoin dominance, and just how terrible Ethereum looks today as well. We're going to cover it all. Be sure to stick around. Let's take a look. All right, folks, before we dive into this juicy data here, I want to talk a little bit about my thankfulness for you and just how amazing my life is because I get to interact with awesome people like yourself. So thanks again so much for just being wonderful, very constructive with the comments. You're liking and subscribing and following, but also interacting and communicating a lot too in the videos. That helps grow the channel a little bit more faster than previous. So we're starting to gain some strength there. We got over 100 plus new subscribers from some of our videos over the weekend. So it's awesome stuff. Welcome aboard. Thank you so much. We're going to quickly look here just at some Twitter posts. Basically, this is basically a Twitter poll. 22 minutes ago, I asked if you think we're going to be able to see the CME gap filled this week, which is between 114 and 117,000. It's a rough estimate. We can see a majority of feel like that is the case. Basically, crypto Twitter is bullish. When we look at YouTube, let's go ahead and get a little refresh here and see. Majority of you also feel the same way. However, a little bit more of a disparity there. So that just kind of lets us know that with the CME gaps here, there's potential for them to get filled. And what they are is just when a Friday market closed and then Sunday market opens. Basically, you see CME futures are closed over the weekend, and in that time frame, there can be a gap that occurs. Basically, the price close versus the price open, and that causes a gap. And in most cases, they are inevitably filled. So if we just take a quick look here at Bitcoin, we got 114.2 to 116.8K. That is essentially the CME gap for us here. So definitely looking good in that regard. As far as potential continuation higher, I'll explain more so on the charts why I feel that way. We're seeing somewhat of a bullish type of convergence here. Still very premature, but it kind of speaks to that holiday vibe that I was talking about earlier, where we generally see less, kind of a slower price action on holidays. And then the day after, we see a pretty significant continuation or that average of 1% return in the last 13 years for Bitcoin. So if you saw my video from yesterday, you'll know what I'm talking about there, but just take it from me here. The days after holidays are typically green, and the days leading into holidays are generally red. That's the concept. Anyways, CME gaps for ETH and Solana, they are fully filled over the weekend. I just went ahead and removed them because they were pretty much just instantly filled within about 12 hours. So no big deal there. Let's look at the weekly, and then we're going to talk about the 3-day as well. And just to note here that on the weekly here, even though it wasn't a perfect situation, we can see our previous high of roughly 109,000 was retested here as a new low. So as per usual with trading, it's never exact science. So make sure you understand that just because we closed just a little bit below that previous high doesn't mean we're going to go straight down. It just implies that that area, that range of roughly $2,000, 108 to 110, is a solid support range for us. Okay, at least for now on the weekly. While we do have some larger time frame divergences, these divergences have been occurring for roughly a year to year and a half. This is what March of 24 is when it started. So it's a very slow progression. So the price can still totally move up while we move down with our RSI divergence. But the overall sense here is that we're still above our super trend here with our moving average, the 20-day SMA, and these are all very, very positive signs. Let's go ahead and look at this one here too, the Gaussian candle. Gaussian channel. I call it the candle sometimes. So the channel here basically tells us we have a lot of confirming factors. So we got the upper band for the Gaussian channel. We got our previous high working as a new low. And we also have, if you can't see that there, that's the 50-day SMA hanging out just below the price action. So that, my friends, is what was referred to as confluence. It's not an Elliott wave theory. It's a legitimate area of support based on a lot of confirming factors coming together at one point. Okay, so please understand, magical fib levels on the charts. Sure, that helps a little bit. That's more of a placebo. But if you have confirming factors with those levels, then it increases the odds of success. And what I mean by success here is the likelihood of the price bouncing in this range of just say 106 to 110 is a higher probability. That's kind of the concept there. Let's take a look here at Bitcoin dominance and just kind of see that money is flowing almost directly from Ethereum and into Bitcoin. So Ethereum's down here. We can see the price action is basically pulling back. I'm willing to speculate ETF outflows are quite high. And if we look here as well, we can see Bitcoin just absorbing that market capitalization. So we want Bitcoin to go sideways in this channel, but if it continues to progress towards 60%, then we're going to have another problem on our hands there where altcoins are going to continue to be somewhat damaged. Keep in mind, altcoin index is still quite high and we have a large market capitalization. We're still over that $1.6 trillion market cap. And that's a good sign. We'll look at that here in a minute. Before we do, just want to touch on liquidations here and recognize kind of where we're at. Overall, we can see ETH has more longs getting liquidated than shorts, and Bitcoin is break even. So as Bitcoin goes, for lack of a better term, sideways in its tentative range, we can see Ethereum is effectively going down. So it's just that natural pullback in Ethereum with market capitalization retracing and that dominance pulling back, essentially flowing into Bitcoin. And surprisingly enough, altcoins are not really getting hit that hard today. So it's a good sign overall, pretty good. So I personally like it the way we see it here. Now we are in a fear type market here with fear and greed index. Now this is just kind of the upper range of that fear category, if you will. But the concept here is as fear goes higher, then basically the index goes lower, then we generally will see more buying pressure from institutions and also large whales. So that's typically a favorable sign for us to want to buy too, even though everyone's scared and they've probably been FOMOing in this whole time and have no money left to be able to put in. Now is generally the better time to consider buying. Okay, that's the concept there. Now, taking a look here, quickly to note, ETF inflows, we don't have any data there because that is Sunday. Sunday, we had basically markets were closed. So there's not a lot of information there to kind of extract. But what I do want to talk about is the backend data here on the charts. More specifically, how we have basically larger traders here, more, you could say, I wouldn't say whales, but they have larger balances. These are like over $100,000 positions. They have more short positions open than longs right now. And of course, the top trader margin delta is high. They're trading like crazy right now, which is typically a favorable sign. This speaks highly to that of the holiday or the post-holiday type of situation there. And what I mean by that is if you saw my video from yesterday, you'll know that holidays are generally construed as like kind of just flat. Like I think we had an average return of like 0.5% in a 24-hour period so far this year, just to give you perspective on holidays. And overall, I think it's 0.75% return in the green on holidays. So that's kind of just something to be mindful of. But we look here at the volume delta here. This basically tells us that institutional traders are shorting pretty heavy right now. Okay, as that pulls back, volume is dropping. That basically implies that they are shorting as Bitcoin broke into its descending type of trend. Okay, I'll show you on the charts what I mean by that. But the overall concept here is that it's hard to trust this current pump right now because we finally broke free from our range, but Bitcoin's been notorious about faking us out on these descending trend retests, especially with the overall volume. Let's talk about that. First of all, open interest support, 110,000 is that rough estimate. It's 110.3, but you could just say 110,000 is easy number to remember. We have a lot of support there, and as well as 109,000. I'm just going to round up a little bit here for you to keep it easy. 109 and 110 are the two areas of open interest, letting us know that we're building that support and volume below the price, or that interest in that volume with those positions there. Liquidation delta is essentially approaching break even, but still slightly on the green, which is good. And if we take a look here at the overall sentiment, let's actually quickly kind of recognize here that we are seeing a lot of liquidation above the price between 112 and 114. So people are getting pretty heavy on their shorts as Bitcoin continues to climb. So that leads me to believe we're probably going to see somewhat of a squeeze there, even though there's not a tremendous amount of shorts in the market. There's still, there's still plenty of them, okay? So trust me on that. There's a lot of shorts still. That overall sense here, though, basically, what does that mean for us? Well, looking at the daily, here's something to kind of recognize. We have this descending trend that is tentatively being broken. I'll show you in the 4-hour time frame, a little easier to identify, but the key here is that we're still under some moving averages, and we got a lot of resistance between now and that CME gap. In other words, 115K is, if I'm not mistaken, the local range here for the amount of open interest we have. 118,000 is the largest amount, but if we obviously zoom in a little bit, we can maybe see that. So 115 to 118 is that range of resistance for us, and that puts us right in that. That's where that CMA gap is hanging out. Same thing here as well with MACD converging and stochastic swinging up for the third time. These do carry more weight because of the fact that we keep retesting this lower high pattern, and inevitably the bears are going to have to give way. They can only sell so much, right? So at this point, seeing this momentous potential shift with money flow index increasing, breaking tentatively, emphasis on the word tentative, we are looking at a pretty decent continuation potential here, okay? So I'm not one of those folks that's blindly bullish. I'm not just going to tell you what you want to hear either. I'm confident there's probably most other influencers doing the same thing as far as just kind of being like ultra biased. Me personally, I look at the charts, tell you how it is, and that's just the easy way to understand it. There's no sugarcoating, right? And having said that, though, this descending trend breaking that is usually a big deal. However, we have been faked out multiple times from Bitcoin in the past, so it's hard to trust that. All that being said, we still got some bullish convergence here on the RSI. We've broken above 50. We are seeing higher money flow index than previous timeframes, and MACD is converging. These are mostly good signs indicating further upside is likely. Okay, so once more, take with it what you will, but all the data we see here so far does suggest that further upside is more probable, even though it's not a significant margin. All right, there you go. That's my Bitcoin analysis. If you're looking for a new exchange or possibly just want to help support the channel, BitUnix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. Let's take a quick look here at Ethereum, kind of see what's going on here next, because Ethereum is... what is the best word to describe it? The nice way to say it is it's underwhelming, okay? And we're going to take a look and see what that underwhelming data looks like. So when I pulled up my playout charts earlier, which are, by the way, available on Twitter, Telegram, and Discord if you're not familiar, you can see here that the area of open interest is 4,400. So that's the current resistance range for us. We also have the same thing at 4,300 and 4,500. So those easier round numbers are areas of resistance and support. So we can presume that 4,300 should hold. We close below that today, we may see further downside. But what's interesting about this is that liquidation short delta is increasing. We're seeing way more people starting to short Ethereum than ever before. Like last week, we were super bullish. Now, for some reason, it's just desperately bearish, okay? All that said, though, we got a lot of liquidation. The two areas to consider for take profit targets, if you're considering either shorts or longs, you're looking at 4,100 to 4,200 as the lower side, and 4,500 to 4,600 is the upper. Okay, so we got heavier concentrations to the upside, leading me to believe a short squeeze is likely. But once more, that does require Bitcoin to maintain 111, 112,000, because it just feels like Ethereum is really, really losing steam here. All that being said, let's look at the daily time frame, see if there's any significant divergences. As per usual, we're still maintaining below the 20. I talked about that yesterday being a kind of an early indication. We're also testing 50 on the RSI, but money flow index is high. So the odd thing about this is that we're seeing more money flow into this coin as the price continues to pull back, which is a good sign. People are loading, but it's also unfortunate because institutional and whale traders are probably dumping. So it's kind of what we're looking at there. It's not really the most optimal situation, but we do have the most amount of support at 4,300 based on open interest and or volume support. So all that stuff kind of combined still leads me to believe that 4,300 is the tentative bottom. But there is potential to see 4,100 because there's a lot of liquidation down there, and that's our local bottom too. So it feels like the bottom is not in yet for ETH, but if you're going to be, if you're like the gambling type, 4,300 should work as a support, all right? All that said, we lost our 0.618 fib level. 0.786 is kind of hanging out there. There's some confluence there, so keep in mind, this isn't just a magical fib level. We have the 200-day SMA hanging out there too. So that tells us the average of the last 200 days, or in this case, it's more like what, it's a smaller number because it's a 4-hour time frame. You effectively have to divide it out. But the concept here is that over the last X amount of days, the average amount of interest for this price is higher at this level. Okay, so 4,300 once again is kind of reaffirming that support just below the price. All that's kind of combined. We look at the 4-hour time frame. Even though the daily time frame is still looking bullish, it's hard to trust because the 4-hour time frame is so bearish. We're still looking under 50 on the RSI, stochastic swinging down. Money flow index is almost at 30. While we do typically see a pivot point in this area, we still have further increased odds of lower price action for this coin right now. So I wouldn't trust 4,300, but I would say it's the last leg of defense between now and 4,100. So take with that what you will, but majority of altcoins are doing decent today, and ETH is just laying flat. So that's where we're at there. All right, back in for Solana. Taking a quick peek here. Easy way to identify it, we have a ton of resistance between 205 and 210. We had talked about that yesterday. Liquidation short delta is still very high at 3.5 billion. And we look at 205 to 210, that's the significant amount of liquidation here locally. Also 220. So do I think we're going to see a short squeeze? Yes. I'm saying that on actually a lot of coins right now because they look like they're loading ready to prepare for a significant uptrend. But once more, we don't take trades based solely on that one thing. Let's go ahead and look at the macro and recognize a few things here first. So as we can kind of see, there's a pretty obvious ascending trend here. And generally speaking, with ascending trends, you want to kind of expect them to hold until they don't, right? That's kind of the trend. That's why the term "the trend is your friend" comes from. Okay, so while this is not an exact science by any stretch, or these numbers or these lines on the chart I'm drawing are exactly that, it emphasizes the support that we have in the 20-day SMA here, and we're still above that. So generally speaking, Solana is still in decent shape on the macro. And we look here, we're still over 50 in the RSI, stochastic swinging down. While we do have somewhat of a bearish divergence there for the RSI, and MACD is diverging, we want to presume these support levels will hold first. So oftentimes, ascending trends and or moving averages, when they kind of work together, you want to give them a chance to be able to maintain. So am I telling you to go long and strong right now at 200? Not exactly, but it is a psychological support, and there's a larger propensity for further upside because of that. To me, support levels and ranges based on volume and open interest carry more weight than magical fib levels and, of course, the Elliott wave theories. Those things are all just kind of hypothetical. And truth is, this is too, don't get me wrong, but in my experience for the last 20 years, I can tell you that these things, these common indicators, these more simple indicators are more reliable just based on overall trends. Okay, now we're under the 50 and the 20-day SMA on the 4-hour, and we've also been unable to reclaim 50 in the RSI. So these are all very bearish and weak signs. So once more, nice macro, terrible micro or smaller time frame, or if you will. This being a transitionary time frame, it's transitioning bearish is what it's telling us. Okay, so that really just implies if you have a good macro structure and a bad microstructure, you don't trade the damn thing. It's simple as that. People seem to want to force stuff based on their intuition and all this crazy little crap. And the truth is, right now, you don't want to trust this because it's not a good situation. Okay, that's just kind of the concept there. All right, so hope that makes sense and I described that effectively. Let's go ahead and move on next to SUI and see where we're at. Once more, 340 and 350 roughly is that area of open interest. It's kind of dissipating a little bit there. In fact, I want to kind of take a look at that smaller time frame and just kind of see if the last 7 days tells us anything, and just kind of see where we're at there. So we have open interest at 320. It's starting to accumulate. So that area of interest there is basically providing itself as a potential support. Essentially, again, I don't need to get into it. It's a whole algorithm, but open interest is easily described as support or resistance depending on what side you're on. Okay, so that's somewhat of a support for us. Just keep it simple. Seeing here, liquidation delta short heavy. We're at 300 million. That's about average for this coin, but we do have more liquidation above the price. Okay, so 340 to 350 has that heavy pocket, and or $3 conversely. So I did mention previously, if we travel into the 3 to 310 range, I'm going to be interested in buying. Right now, at this point, we saw the local area liquidation at 310 was retested. Of course, that happened while I was sleeping, as per usual. But if we do see, and I happen to be conscious at the time, at between 3 and 310, I'm interested in the long because there's a lot of confirming factors in that area, at least previous confirming factors. We have our 0.618 golden pocket fib levels, and we also have, if I recall correctly, there was some volume in that range too. We'll have to take a look at the daily time frame and just kind of see a couple of things here. So on the big picture here from the daily, zooming out ever since we've been, 160 to 550, we see the most amount of interest here or volume at 345. So I want to reaffirm that 345 to 350 or 340 to 350, that area of relative open interest is also a macro resistance too, based on that point of control, which is volume. Okay, so just be understandable in the sense that just shooting straight up to $4, $5, $6 is unlikely at this point, and we're going to probably see some slowing pressure if we get back into 340 to 350. My thought process is getting into that psychological support at $3 seems sensible, so we can take it long up to that 340 range and essentially, take majority of profit, maybe let the rest ride. Those are the kind of things I like to look for. We also have a 200-day SMA hanging out here at about 312, 310, so that's good. And macro-wise, we're stochastically swinging up for our third attempt secondary and tertiary swings to the upside for stochastic are a lot stronger than the first. So that leads me to believe that we're going to be bottoming out soon. So ultimately, there's not like a whole heck of a lot here that's like, dude, you should totally take a long right now. But if we do see that desirable range of the low $3, once that liquidation level has been swept, it would be very practical to consider a long there. Between now and then, you could hypothetically have some success taking a long to that 340 range, but we're still in a descending trend. You want to wait for that to break first before you do. So to me, being patient on this coin is probably the more optimal consideration, even though patience is not every trader's strong suit. Let's look at XRP and round this out here for us, and we can want to just kind of double check some stuff here. First of all, 280, no, we're gonna have to zoom in a little bit more because these macro open interest ranges are not super helpful when we have such large ascending trends. All right, here locally we can see 285 and 290. Basically 285 to 290 is a solid amount of open interest. So if we do travel into that range, it would probably be somewhat of a short squeeze, but we also may see a retracement too. It'd probably be somewhat of a fake out. That being said, though, that we have resistance above us. Simple way to understand it: liquidation short delta is at 1 billion in the red, but we do have a lot of liquidation between 285 and 295. It's super common to see liquidation events occur at massive areas of open interest. But what you need to see in order for that to happen, or that shift in momentum, is high volume. And we don't have that just yet. We had a high volume candle here recently, but most of it's fizzled out here. So things I'm going to be paying attention to is being above this moving average here. That's an important factor, because if we don't have enough volume to maintain or sustain an increase, then the price is going to keep bleeding out. Because all these other idiot influencers are going to keep telling you to keep buying these dips, which, don't get me wrong, spot bag, perfectly fine. But if you're using leverage right now, trying to take a long, it's just a bad idea. That's a simple understanding. Take a look though, fair value gap is upwards of 295. So we do have some potential considerations here for the price action to go higher based on just massive overextensions to the downside. We're at an 8 on TD sequential, basically telling us we've had 8 solid days of red. And people get tired of that. You eventually start seeing a reversal at that point. We can also see a stochastic swing, albeit this is a first attempt. We're seeing somewhat of a bottoming out with money flow index increasing. So MFI going higher is a good sign in most cases. Just bear in mind, trusting MFI on the first day after a holiday or on a Monday can oftentimes be a false positive. Those who use the market cipher may or may not know this, but it's built in, and you want to be careful using MFI as a confirming factor with those little red and green dots, I think they are. Anyways, just some friendly advice there. Other than that, the 4-hour time frame, pretty just terrible. There's nothing great here. So, I mean, even though I do think we have potential for the price action to continue higher, I think we're in a good situation here to just kind of wait it out. I'd recommend waiting on trading this coin. That's kind of the easy way to understand, because you don't just buy these dips to buy the dip. Okay, there's nothing here. What we're looking for, keep this in mind, we're looking for a higher high and a higher low. So far we're just kind of fizzling out here in this range, pulling back consistent with Bitcoin. But if we were to see, higher highs and higher lows, those are things you want to kind of consider taking a trade into. Just know 285 to 290, once that level is swept, it's a solid chance we see a pullback there, because there's so much volume resistance, and $3 even is also that resistance level too, based on psychological thought processes. Okay, and again, those round numbers are heavily sought after. So shorting at $3, as I mentioned before, obviously hindsight's 2020, that was a good idea. It would be a good idea again, depending on the circumstances. All right, there's a lot that's going to change between now and then, though. You don't just short at $3 because it happens. You want to reevaluate and see what the market looks like too. That's why we look at this consistently day in and day out. Okay. So build a habit of being more thorough, and you're going to have a lot better results. If you want good results, cryptocash.tech is a site linked down below. Come check us out if you want to become a better trader. But also make sure you join us on Telegram, which we do have a new Telegram community. It's like just kind of a Telegram chat. That's a better alternative for you. But also we have a pretty robust Discord. It's pretty awesome. We got some excellent admins over here, and just have a lot of fun. So it's a good stuff. Check it out when you can. We look forward to working with you. Have a great rest of the day. Thanks again for being you. We'll see you next one. Take care.